welcome to the farm. Today we're going to focus on the emerging development of unsponsored ADR issues with Indian equity underlying. Now, American depository receipts of over 50 Indian companies, including TCS, Bajaj Finance, Apollo Tyres, United Breweries, Zee Entertainment, Titan, NTPC, Britannia, Unitech, Power Grid, Motherson Sumi, Tech Mahindra, will soon be trading over the counter in the US, and many of these companies may not even be aware of this development. Last year, the government notified a new depository receipt scheme that permitted the establishment of Level 1 sponsored and unsponsored ADRs for the first time. Level 1 ADRs are non-capital raising ADRs. An unsponsored ADR program is established by a foreign depository bank without the participation or consent of the company whose shares underlie the ADR. Unsponsored ADRs trade only in the US OTC or over-the-counter market. Competing depositories can establish multiple unsponsored ADRs for the same company. An unsponsored ADR and a sponsored ADR cannot coexist. So if a company wants to do a sponsored ADR, then it has to have the unsponsored facility terminated. The new scheme applies conditions to unsponsored ADRs. The depository receipt holder must get voting rights, and the depository receipts must be listed on an international exchange. That means a platform for trading depository receipts which is in a permissible jurisdiction, is accessible to public for trading, and provides pre- and post-trade transparency. The depository receipts scheme came into effect on December 15th, and since then, Bank of New York Mellon and other foreign depository banks have made a slew of filings for Level 1 unsponsored ADRs on the back of Indian shares. I counted 50 filings. Bankers tell me the filings exceed 100. When will all these ADRs start trading, and what impact could these unsponsored ADR programs have on the Indian companies involved? Well, actually, they're uninvolved, but you know what I mean. Well, to talk about that, I'm joined by Rajiv Gupta of Latham Watkins and Varun Chandra of AZB. Gentlemen, welcome to the show. Thank you very much for joining me. The very first question I want to put to both of you is, when will these ADRs commence trading? Rajiv, first, a process question. How does it work? Does the foreign depository get its Indian arm to buy shares in India, then convert them into ADRs, and then sort of market or sell those ADRs to investors in the US? Or does an Indian shareholder go to a foreign depository and get this process going?
Menika, the initial process is really to establish the ADR program, which, as you just noted, Bonnie Mellon and a few other depositories have already established for some of the Indian clients, Indian issuers. The next step would be that when these deposit programs go effective, as I understand, there are still certain SEBI regulations are supposed to come out and clarify a few things. But once it goes effective, the actual process is pretty simple. ADR holder can instruct a broker in India, let's say, and ask them to buy shares on their behalf in India, and then take them to the depository, say Bonnie Mellon, and say, I want ADRs in return. Bonnie takes those shares and will issue ADRs to that investor. Once they start trading, the other option for the ADR holder is, of course, to buy in the OTC market once they start trading in the OTC market. So the process is quite simple once the ADR is effective.
Okay, can an Indian shareholder approach a foreign depository and say, look, I have a friend in the US who wants to own these shares. Can you convert my shares into ADRs and so that he can purchase them off an OTC market?
The scheme that came out last December does seem to permit it, but as we'll sort of realize through this discussion, there is still a lot of operationalization that is required to be undertaken in respect of the scheme, including with respect to who can deposit shares into the depository facility and how exactly this process is going to work.
All right, let's talk about the operationalization, Varun. There is an RBI FEMA notification that was out in January. Some lawyers tell me they are hoping for some guidelines from SEBI, though I'm not really sure what those guidelines are supposed to do. Others tell me that they expect NSDL will do headroom monitoring, and we'll get to the issue of how these ADRs count towards foreign investment in just a bit, but that headroom monitoring in terms of foreign investment. So what are we waiting for in terms of any further regulations, rules or guidelines from any of the Indian regulators to be able to operationalize this?
Okay, so I think to start off straight, SEBI doesn't really get involved with ADRs and GDRs. These are foreign securities, so to the extent that they remain unconverted into Indian equity shares, SEBI has traditionally never gotten involved, and I don't expect them to get involved.
Okay.
I think the only place where SEBI comes into the mix is when, or rather how these the underlying shares in respect of these DRs get counted towards public shareholding for Indian listed companies.
Sure.
Otherwise, the primary regulator for ADRs, GDRs has always been the MOF and the RBI, and it will be those regulators who will need to put out the sort of clarifications that are required to actually operationalize the scheme, as they have under the erstwhile 1993 scheme as well.
Okay, so let's try and understand how many more clarifications we need. One clarification I've sort of run into consistently through the course of this week is the question regarding how these ADRs will be counted towards foreign investment limits. Will they be counted as FDI, which is typically how ADRs are counted, or will they be counted as FPI? And that will also then impact what constitutes public float, for the minimum public shareholding guidelines of 25%. Varun, any clarity on this, or are you hoping that the ministry will sort of clarify?
Yeah, that is, I think, one of the sort of primary areas that requires clarity. Just to deal with the point that you made on public shareholding, Menka, the 2014 scheme actually prescribes that as long as the ADRs pass on the voting rights on the underlying shares to the ADR holders and are listed on an international exchange, then the shares underlying those ADRs should constitute part of the public float of Indian companies. However, the securities contracts regulations rules, which actually deal with this whole issue, still say that shares underlying ADRs and GDRs are required to be excluded. So as it stands right now, there is a little bit of an inconsistency between the two. I think it's a matter of time before the SCRR is actually amended to actually take into account the provisions of the scheme, because that clearly seems to be the intention.
And what about how this will be counted towards foreign investment, Varun?
Yeah. And so just coming to that, under the 1993 scheme, there was actually an express provision that said that shares underlying ADRs and GDRs will be counted as foreign direct investment. And that was a position that was taken, and there was no doubt about this. Now, under the new scheme, there is a little bit of an ambiguity that has been introduced by the provisions of one particular clause, where again the clause seems to suggest that the shares underlying ADRs should actually be counted as FDI. However, the explanation to that clause seems to imply that it would be part of the FPI shareholding. So I think that is one area that needs to be clarified very quickly. The RBI did put out a circular a few weeks back, but unfortunately this is an area that they have not really touched.
There's one more issue which has to do with the fact that the 2014 Depository Receipts scheme says voting rights will have to be granted to DR holders, in the case of such unsponsored depository receipts. Do you see that posing a problem?
I don't see that as being an issue, to be honest, and Rajiv, jump in here anytime. The way I understand it is that in any event, as far as ADRs are concerned, voting rights are typically passed on to the DR holders under the terms of the deposit agreement. It's only with GDRs that voting rights are not passed on typically to the holders. They are more sort of the voting rights on those are exercised by the depository in accordance with the instructions of the board of the issuer company, which is the way it's been happening typically till now.
I think it's a very welcome development that the scheme requires voting rights for the shareholders, for the ADR holders. Many times in unsponsored programs, you will find that the ADR holders are not given any voting rights. And we'll talk about the differences between sponsored and unsponsored, but one of the key differences in a sponsored one is that it passes on those voting rights, or requires the depository to do that. So by requiring in a statute, I think the government has made it very clear that they want full protection for the Indian shareholders and the ADR holders. The second observation, Manika, I would make is that there's some confusion about issuers calling me and saying, hey Rajiv, F6 is effective, so how can we find out whether, what is the trading in the ADR? And, we've just talked about that it is still not operational. So there is a difference. F6 can go effective, which is just a form that's filed with the SEC by the depository, but that doesn't mean that the depositories are actually taking any orders for deposits of shares and issuing ADRs. All that is still suspended until all these clarifications that we just talked about come into place.
All right, fair enough. So I suppose there is some time yet, between these filings having been done and the actual commencement of trading in these ADRs, that gives companies some time to come to terms with what exactly is going on, because many of these companies didn't even know or don't even know that ADR filings of this nature have been done. So what should companies be prepared for? Coming up, we find out if an unsponsored ADR program can compel a company to have to register with the SEC or even expose it to new liabilities.